Inflation or deflation? Rising or falling? Which way is it going to go? Now, I have been making my argument that we are in a deflationary period and that eventually this force is going to win out. Basically, once again, the forces of deflation are technology itself driving down prices, the aging of the population, the excess of capacity, and just general pressure caused by too much overhead in the form of debt. This is a tremendous force that's being met with an opposing force. Tremendous expansion in the money supply. Which one is going to win? Well, anybody who pays attention to things will tell you that they don't know. No one is going to say for sure that they have a position. And this is the big argument among money managers, economists, everybody that follows money issues. But it has a greater social effect. I mean, after all, the economy is the foundation of, well, just about everything we do. And certainly, economics and politics are closely intertwined. We'll get back to that. I have been presenting my argument that deflation is what's going to win out, but I know perfectly well that there's a very good chance that I'm wrong. What is the chance? It's about 50-50, really. It's one or the other, right? Or maybe it's both and we come down the middle and the forces just keep opposing each other. That's where we're at right now, certainly. I want to go to an argument that I thought was a good one, written by a man named Clem Chambers in Forbes magazine. And his argument in favor of inflation, opposite of what I've been talking about, is basically twofold. Historically speaking, that's what we have in response to a situation like this. Whenever the government creates more money in one form or another, going all the way back to Roman times when they debased the currency and started making denarii that weren't really made of silver, there has always been an inflation problem. And his second argument is that the market is always right. The market is rising right now, the stock market that is, and they always know what's going on. So therefore, the collective wisdom of all of the money managers in the world is betting on inflation, actually. And you might say to yourself, well, that's kind of a lame argument. Why are you focusing on that? Well, very simply, he's got a point. But more importantly, it forces my hand for my deflation argument. See, as I stated in my previous video on inflation and deflation, we achieved price stability for all consumer-based items, everything that is part of the dynamic economy that flows back and forth. Where we have seen tremendous inflation has been in anything that can be considered an investment. Stocks, bonds, real estate, things like that. And the only inflation that we've seen at the consumer level has been in shelter, rent, housing prices, etc., because they can be considered investments. So we wind up with two worlds, one that is full of deflation, one that is full of inflation, and they are meeting. This is what's playing out in the streets of America and really all around the world. It's not so much about police protests anymore. It's that there are two worlds. There are many ways of looking at it, by race, by income, etc., and all that, but there are two very distinct worlds, and they are in conflict with each other. What I've been presenting is nothing more than the financial version of that same argument that's playing out in the streets. Who said economics is boring? Okay. It is critical. And the financial arguments are going to be driving everything that happens, including protests, etc., etc. One or the other has to win out, one way or the other. For the market is always right argument to be correct, basically, there's a little caveat to it. The market is always right in the longest possible term. There is currently a temporary rise in the market. For my position to be correct, that has to reverse, okay? If you believe that the stock market is always correct. And I do mostly. So, forcing my hand, I have to be betting that stocks will fall. This is not a position I enjoy. I don't like saying, oh, there is so much more pain coming. Yeah, but that is basically what I'm saying. So maybe the stock market is something that's worth watching, and we'll see how it goes. Now, my main argument has been that the Federal Reserve is simply buying time for an effective exit strategy so that we don't have a liquidity latch up, that all of the major players have the ability to get out of their position without running out of cash and having to close like Lehman in 2008. And so this is going to take some time to play out. What I will say is that all of this is happening in the long term. These pressures have been building for 20 years. It's not about the virus. It's not about this or that or the other thing. It's about long term thinking. It took 20 years to get here. It's probably going to take 20 years to get out. Okay, so what do we keep an eye on? Again, I go back to that velocity of money. The US dollar is currently well below 1 in terms of the velocity, which is to say it only turns over once per year. We have a very non-dynamic economy. I asked the simple question, what was it like during the Great Depression? And the answer is that during the Great Depression, the velocity of the dollar was up above 2 most of the time. Fascinating, right? Well, for all of the intervention of the New Deal, it never exceeded about 6% of GDP. Okay? The amount of stimulus that was given was relatively small. What we're experiencing right now is a tremendous amount of stimulus, which is on the order of about 9%, just based on the federal deficit, but with the Federal Reserve action and everything, it's up above 20-25% of GDP. We're grossly outstripping what happened in the Great Depression. And indeed, as the United States geared up for World War II starting in 1940, yes, it was that early, we started to see the velocity of the dollar crash down, and by 1942, it was below 1. You see, most modern record keeping starts in 1948. So we don't have that as part of the Federal Reserve Economic Database or whatever. It has to be kind of guessed because we weren't really keeping track of it back then during the Depression. It did indeed crash below once before when the government started spending a tremendous amount of deficit, gearing up for war. Are we gearing up for war? Boy, I hope not, but we'll see. What we're seeing playing out around the world definitely has to make everybody nervous. But going back to the basic argument, is the market always right? In the longest possible term, it is. But we have an extremely non-dynamic economy as measured by velocity that is deflating very, very rapidly. The investment world is inflating. Those two are always going to be in conflict. There is a problem there. The solution to it comes either that money flows from the investment world into the rest of the underlying economy and starts benefiting everybody, which is deflationary, or it gets destroyed. When there is an excess of capital, markets have an amazing ability to simply incinerate it. There are two ways of doing that. One is a tremendous fall in the stock market. The other is inflation. The money itself becomes less valuable. One of those two is going to happen. It's a question of which one. Now, going back to what this investment advisor said in the Forbes article, one of the things I really liked about it is that he is an investment advisor, and ultimately he said, look, my position is this: I'm hedging my bets. I'm setting 50% cash, and he's 50% things like Treasury inflation protected securities, which can be converted to cash. He's looking at capital preservation. Take the money you have and make sure that it's safe, first and foremost, that it's not going to go anywhere. And what inflation protected securities are is that they are bonds that you can buy that have a rate which goes up and down with inflation. So if inflation suddenly kicks in and the consumer price index starts going up dramatically, you'll start seeing high interest on those. but the underlying value is always protected. That's great advice. So we've got something specifically that you can do. And it's a great way to hedge because whether there's inflation or deflation, you know, deflation means you want to preserve your capital. Inflation means you want to make sure you're covered for it. This takes care of both, and you don't have to worry about it as much. So, in this great conflict that's playing out in the bond market, playing out on the streets, which one is going to win? Are we going to rise or are we going to fall? Are prices going up or are prices going down? Right now, we can't tell. The decision is always made in the long term. There's a lot left to play out. At this moment, no one is really sure where it's going to go. Yes, we're all winging it, but there are people who have a lot of good intuition in their guts, who have a collective wisdom among them. Right now, there is no consensus. But there are certain things to watch, and there are certain ways to hedge your bets. It is the question of the moment, and it won't be answered for several months. And I know, we're in the middle of an election here in the United States. Great time for it, isn't it? At some point, I should probably talk about the election, but that's another topic altogether. Where it stands right now, will things rise or will they fall? Will prices rise or will they start dropping? Kind of one thing to watch is if you believe the market is right, will stocks rise or stocks fall? I know I said to ignore it, but certainly ignore it in the short term. It's going to take some time to play out one way or the other. We're in uncharted territory, yes, but we have some good instincts and we know kind of what to watch. And yeah, actually, we have been at a velocity below 1 once before when we were at war. Okay. I don't know for sure which will go. I still think it's deflation. But that means that I'm betting the stock market will fall. Don't like being in that position. Don't like seeing that kind of pain. But as I keep reading this, that's basically what I'm saying. So keep an eye on it. All right. I'll see everybody. Have a great day.